Hey guys, it's Canadian Kyle here, and welcome to the Wealth Holders Podcast. Today, I'm joined with Mark Morabito, founder and CEO of King and Bay, and he's the chairman of Excelsior Mining Corp, ticker symbol MIN on the Toronto Stock Exchange and EXMGF on the OTC market. Mark, how you doing?
Good to be here with you today, Kyle.
Yeah, thanks for joining me. We had Rick Trotman, CEO of Barksdale Resources, on last month, copper exploration company in the Arizona district. And now we have Excelsior Mining Corp, new producer in the Arizona district. So it's exciting. And you guys are a little different than most copper producers. Instead of extracting the copper from the ground by digging it, you're pumping it out of the ground with this in-situ method. So we're going to learn more about that today. But first, I want to learn more about the man I'm sitting in front of. So, Mark, where were you born? What were you doing when?
Well, I'm originally from Hamilton, Ontario, Steel Town. I lived all over Canada, Montreal and Toronto. I'm living in Vancouver now. Lived in Calgary, and went to law school in London, Ontario, at Western. So I have a good flavor for the country, and I've done a lot of work in the mining business in different areas of the country: Newfoundland and Labrador, Quebec, BC. So although I'm from Hamilton originally, I've got roots in all sorts of different parts of the country.
Very cool. Got to travel all over. And I like to ask my guests what they were doing when they were my age. So I'm 25. So what were you doing in your life around 20 to 25?
I did my undergraduate degree at Simon Fraser in criminology, and I thought I was headed for a career in law enforcement of one kind or another. And one of my professors at the time talked me out of it and convinced me to go to law school. And so I ended up going to law school at Western. So I would have been at law school when I was your age.
Okay. And what kind of lawyer did you become, and what did the job entail?
I was a corporate finance and securities lawyer, and I went to work in Toronto after law school. And in those days, when you were raising money as a company, you really had to do it by prospectus. You either issued a prospectus and raised the money under the prospectus, which is a big, thick legal document with full, true, and plain disclosure of all material facts. Or you did, back in those days, what are called special warrant deals, where you issued the stock, you issued special warrants, which would then convert into free trading stock, and you had a certain period of time where you had to get a prospectus done and file it. And if you didn't, there was a penalty, and you had to issue more stock to the subscribers. So there was a lot of pressure in those deals to get these prospectuses done one way or the other. And that's how I learned about the mining business, is that most of the work I was doing was mining issuer related. And because we had to constantly be doing these prospectuses, either I was on for the company and I had to write the prospectus, or I was on for the underwriter and I had to review and kick the tires on these prospectuses to make sure that from the underwriter's perspective that everything was kosher, that they did their due diligence, because at the end of the day, the underwriter was selling a stock to their clients.
Right.
So I had to learn, when you have to do that, you have to learn about these companies and their properties and the jurisdictions and they operate and everything. So it was really a forced education in the mining business because of the way that the capital markets in Canada were structured at that time. And I came into the workforce after the end of the recession of the early 90s. And so when I joined the law firm, they were very thin on young associates. They hadn't been hiring them because the market was terrible. Then the market shot to the moon, and there weren't enough bodies to do all the work. So as a first year associate, for example, I was doing things I had no business doing that someone much more senior would normally handle. But that was trial by fire education, and typical work weeks were 100 hours plus. I really didn't have a life. I really didn't have a life for the first 3 or 4 years of my career. There was no such thing as work-life balance. If you ever mention that, at best you'd be called a pussy, or at worst you'd be fired. Um, and it was a real grind. It was indentured servitude, is what I call it. But at the end of the day, it was an incredible education, and lessons I learned then are still with me to this day.
For sure. No kidding, 100-hour weeks. That's no joke. So what did that how did that help you when you became a venture capitalist? What
Well, it's just
transition?
sure. I mean, knowing the legal side and everything about it, I practiced for almost 10 years before I went and formed what is now King and Bay, which is a merchant bank and technical services group. So having all of that knowledge on how the system works, how capital is raised, having the contacts that you develop as a corporate finance and securities lawyer in the finance community, I mean, it all served me really well. And I was more interested in what my clients were doing than I was in what the senior partners at my law firm were doing.
Yeah.
I So when it was time for me to make a decision whether I wanted to become a partner, which means writing an equity check and basically signing up for the rest of your life, I just said, you know what, this is the perfect time for me to get out. And the market was in the tank at that time. It was just after the dot-com bubble. But I saw that as an opportunity. Mining is a cyclical business, and that was a great time to go out and start securing new projects.
Now I want to ask about company. Alderon Iron Ore was one of your projects that you did, and I wonder what's different from that situation with Excelsior now.
So, at the end of the day, that deposit is going into production, but it's a classic example of what happens in the mining cycle. You know, we had our partner was China's largest steel company. We did a $400 million deal with them, of which we pulled in about 280 million in commitments and firm cash. There was more yet to come, but that didn't come to fruition. We had Liberty Insurance out of Boston as a major shareholder. We had real institutional backing. We had a permitted project with a 30-year mine life in a brownfields district in Labrador. But that's a bulk commodity business, iron ore, and
Hmm.
that's a game that the big boys play: Rio Tinto, BHP, et cetera, Vale. And as the iron ore price went up, and the big boys saw, I mean, it was up 140, 150, 160 bucks a ton. The big boys saw a threat to their oligopoly. And what they did was they flooded the market with iron ore, and they drove down the price. And it's really a cleansing mechanism. What it does is it makes it more difficult for up and coming companies to attract the capital they need to construct their business, and
Sure.
basically just wipes out the competition. And they can stand losing money for longer periods of time, because at the end of the day, once they've wiped out the playing field, they just ramp the prices back up. And that's what we're seeing today. This price is over 100 bucks a ton. So, you know, it's at the end of the day, um, bulk commodities are a game for the big boys. I think that's the lesson for me anyway. At the end of the day, you have to be able to withstand their temper tantrums, and it's very difficult when you're a single project company trying to build $1 billion mine. Uh, you, uh, you have to have real staying power, and it's very difficult to do without cash flow. So that project is going to go into production with another producer. Unfortunately, it won't be with the management team that permitted it and did all the initial funding
Right.
and all the initial work. But it's not because there was anything wrong with the project. It's because bulk commodities is a game for those with very, very deep pockets. And the other problem we had, I thought I had that licked and I've never talked about this actually. This is very interesting. Your audience is going to get something here that most people don't know.
Perfect.
I thought I had that project, that issue licked. It's not like I didn't know that iron ore was a game for the big boys. You needed deep pockets, and that
Yep.
eventually they would try and drive out competition. That's all historical fact. What they did in the last decade is not something that they haven't done before. They've done it many times. It's how they protect their turf. But I thought I had it licked. And I had it licked because I had China's, what at the time was China's largest steel company, their flagship steel company, at the time, the second largest in the world, backing the project. And as I said, they had put in almost, $300 million. They had sunk costs. They had a vested interest in seeing the project through to fruition. So that was my ace in the hole. That's what was going to see us through the inevitable temper tantrums thrown by the big producers, the big three, in an attempt to drive down costs and drive out competition. We knew their playbook. And I believe that had the political situation in China not changed, that would have stayed true. Unfortunately, when President Xi came to power, he did this massive purge in the name of anti-corruption. And what he was really doing, because what most people don't understand is China is a one-party state, but there are different factions within the party. So in a practical sense, it's a multi-party state. It's just under one umbrella.
Sure.
And when he came to power, he purged all of those in the political class that weren't of his tribe, including my chairman at Hebei Iron and Steel, and all of the senior management, and replaced them with his own appointees. This was done across state-owned enterprises across China. Then he, as some of your viewers may be aware, had himself declared president for life. Okay, and that's something that in the West didn't get near enough attention. And as a result, any project within the state-owned enterprises that could be identified with previous leadership who had all been sacked and in some cases put in jail, nobody wanted to touch them. So it's not like in the West where corporations have this accountability to their shareholders and, just because you didn't like the last CEO, you're just not going to work on this project that the company's put all this money in. Of course you are.
Mm-hmm.
In this case, we became orphaned, and that our partner no longer had the political commitment to the project, and they didn't care how much money had been put in the past. That was the former chairman's project, and nobody wanted to be associated with that because he was in jail. Now, he wasn't in jail because of our project or anything in connection with it, but they didn't care. He's in jail.
Mm-hmm.
And all of his senior staff were either in jail with him or exiled, never to be heard from again. And again, this happened across all sorts of state-owned enterprises across China. And it was a political purge. And so we no longer had that ace in the hole that I banked on when I brought them in the first place. So we didn't have that defense against the deep-pocketed defense against the anti-competitive actions of the big three. So when they flooded the market and drove down the price, we had nothing to protect us. And you couldn't raise any money. You went from I think our feasibility study was done at 130 pounds iron ore, and the price had gotten as low as $40 a ton, not pounds, a ton.
Yeah, yeah.
So it's unfortunate, but that's what happened.
A prime example of political risk in the resource space for sure.
Yeah, a little bit nuanced in that our jurisdiction in Canada was safe, but the jurisdiction of our major partner, not so much.
No kidding. So why, if base metals is for the big boys, why did you decide to go with Excelsior and copper?
Well, it's bulks for the big boys. The bulk commodities are
okay.
Coal and iron ore, etc. So base metals I love because at the end of the day, you know, I'm not a gold guy, so I don't like I don't like mining something you just pour into a mold and stick in a vault. I like to mine something that you use.
Right.
So copper is a good bet, and long term it always has been. And you know, the move to electric vehicles is, you know, come on, like I think the average amount of a internal combustion engine vehicle is 30 pounds of copper, and there's like 120 in an electric vehicle. I mean, there's just no comparison.
Yeah. 4 times as much. So, but why Excelsior? Because like one in like every 1,000 projects gets developed for a copper project. So what set your eyes on Excelsior or the Gunnison project specifically?
So, I mean, you had a initial defined resource. There had been a lot of work done in the past. You had two really smart geologists, and it was orphaned because it used to be called the I-10 project. If you look at the presentation and the location maps, if you were to model a pit where you would put a pit, dig a big hole to mine it, the Interstate 10 runs right through it,
Mm,
right?
yep.
So it got the nickname the I-10 project, and it also had a lot of overburden over the deposit. So you had a high strip ratio. So that although there was copper there, it was problematic for a couple of reasons, and it's also unusual in that it was a highly fractured ore body, meaning it's all broken up and highly permeable, so you can push fluids through it. And it was once at surface millions of years ago, and so the copper resource is oxide. Um, and of course, oxide copper is what you want. If you have an open pit mine with a low strip ratio, you simply take off the strip, you dig it up, put it on a leach pad, leach the copper out, and then run the pregnant solution through what's called an SXCW, which are all over the state of Arizona. And nothing novel about that. Instead, what we do is we run a weak acid solution through the ore body in the ground, pull it back up, and then run that through the SXCW. And there just aren't that many places in the world where the right geological conditions exist where you can do that.
Yeah, because so at the Gunnison project, you have these holes drilled in the ground, and maybe explain it a little more. What's exactly being done there? Because there's injection and recovery wells, and what is in situ recovery method for
No,
someone that's
you have one injection well and there's 4 recovery wells surrounding it, so you over a discrete area, and so that's a well. One injection well, 4 recovery wells is a well, and then you just drill those. You create a well field, and you can. It's easy to scale up or scale. You start small. You know, 40 wells we have now, 41 wells. We could have 400 if we wanted to, and one day we will. But you know, you can control the scalability of the project, therefore control your costs much better. And you put weak acid solution into the ground, flow it through the ore body, and then the recovery wells suck up the solution. It's really that simple. And all of this is occurring below the water table, so which is key. Like you couldn't do this if you were above the water table because you'd risk leaching solution into the water.
mm-hmm.
But our deposit is below the water table, so all of our wells go through the water table, and they're cased in concrete and steel, and we mine the ore body in the ground, in situ. And when you're done with that particular well area, when you've taken all the copper out you're going to get and your recoveries start to go down, how do you remediate it? Well, very easy. You just run fresh water through until all that comes back is fresh water. And you cap off the well and you're done. You don't have a big, huge, ugly pit in the ground. You don't have any contaminated water sources. It's a very environmentally friendly way of mining. And you know, there's no scarring of the planet. There's no trucks and dust and dynamite and all of that stuff. It's just you don't have any of it.
Yeah. So when you put an injection well in and four recovery wells, you just are you blasting it with a ton of pressure? Like how long is this process to take? So if you before you
Slow.
can move on to the next
It's
spot.
very slow. It's very slow. The acid solution you're using is very weak. It's not much more acidic than table vinegar, and you're dissolving the copper very, very slowly. So you can leave these things running each well for a few years before you've dissolved all the copper, and then you just rinse it with clean water and move on.
And how many copper projects are doing this in situ method right now?
Well, not very many because the geological conditions um, that make this doable don't exist in very many places. So, southern Arizona and the Southwest generally have those opportunities because of the unique geology in the region. Um, this has been used in the past in Arizona, but never as the full mining method, always as what we call an adjunct. And so a company would have an open pit mine.
Mm-hmm.
There would be copper resource outside the pit area that they'd want to go after without necessarily extending the pit. So they would use In-Situ to push a weak acid solution through that area of the ore body, and then typically the solution would drain into the pit, and then they would pump it out. So it's well established technology, but it hasn't been used on this scale before, where an entire mine environment is being developed using In-Situ technology.
So, Mark, I want to know why you would invest your hard-earned money into this I-10 quote unquote project where you knew it was going to be in situ mine and out. Like it seems like a lot of risk. You're in Arizona too. Isn't permitting notoriously time consuming there? Like why did you decide to commit to this project?
Well, I mean, I felt that it was permittable, and I like the state of Arizona. And the project is remote, and it's in a jurisdiction that has very high unemployment. So normally what that means is you're going to have high infrastructure costs. So your getting your electricity, getting water, getting transportation are all going to be difficult because you're remote.
Mm-hmm.
Okay. But in this case, we're remote, meaning people don't live nearby. In fact, in the late 60s, early 70s, it wasn't far from us that they were doing the testing for the lunar moon buggy. Nobody lives near you, but at the same time, you have a dual railway running from the West Coast, right adjacent to the property. You have high powered transmission lines running through the I-10 corridor, and you have the I-10. So your infrastructure costs are upkiss. You're literally just bolting onto all of that.
Right.
Build a railway siding, build some service roads off the I-10. Build a new substation to access the electrical grid, cheap. And I felt, that was a huge advantage, low capital costs because of that. Also felt that because we were remote in a jurisdiction of high unemployment, that we could get a permit because we could get community support. And that's exactly what happened. The communities that are, I wouldn't call them nearby, but the ones that are closest that
Mm-hmm.
would benefit from our operation all supported our project.
Very cool. And how did COVID affect the project? I noticed that Excelsior was going to start production right when COVID hit, so it's kind of a heavy hitter for you guys, eh?
It knocked the stuffing out of us, is what it did. We started up production and then we had to shut down. So, it robbed us better part of a year, and you just have to take the hit and move on. There's nothing you can do about it. Arizona got covered with COVID, and more importantly than that, the supply chains all got whacked. So, the chain is only as strong as its weakest link, and you got parts you need and pipe you need and connectors you need, and electrical components and pump parts. And God, we need a lot of pump parts, let me tell you, with our operation. I mean, if one of the suppliers in that supply chain is significantly disrupted, you're not doing anything. So COVID knocked the stuffing out of us.
Yeah, for sure. But you're back at it now, right? You're producing again, and
Yeah.
what's the goal for 2021?
So let me explain something to you. There's another In-Situ project run by a very competent mining group called the Florence Copper Project. And they took a different approach to their project. What they decided to do is get a permit for a pilot operation. So it only is temporary. So you can run a test operation, and then you have to go and reapply for a full permit.
Yeah, I
Okay.
saw that. Yeah.
So Florence, run by TSX, they ran a very successful pilot operation, and they learned a lot, and they had to do a lot of tweaking and modifications, and they had to work through a lot of problems. But that's what a pilot operation is for. And at the end, they were very successful, very happy with the results. They had huge amount of learnings, and they're ready to go into commercial production, but they can't because they don't have a permit. Now they have to go through the entire permitting process for commercial production. The pilot permit doesn't make it any easier for you than to go get the permit for commercial production. They're separate processes. So it's not like, well, you got one step in already. It doesn't work that way. People may think it should, but it doesn't. So they had a great pilot operation, but now they're dead for a year to 2 years while they get their full commercial permit. We didn't do that. We said, forget the pilot operation. We'll just start with a small well field, 40 wells. We're going to go for the whole permit. So we're permitted for the life of the mine, up to 110 million pounds a year. But because we should run a pilot operation, we have to go through the same thing they did, which is a period of learnings and tweakings and adjustments, because it is more complicated than dynamiting a big hole in the ground and digging up the rock. And so that's what we're going through right now. It's what we call well field optimization, where we have to try all sorts of different methodologies to get the highest flow rates in our well field and extract the most amount of copper. And so we're in the pilot phase of production. Even though we didn't get a pilot permit, we chose a different path. And I'm glad we chose that path because now we don't have to re-permit. But but there's still a learning period you have to go through, a pilot phase, we'll call it, and that's what we're in right now.
Okay. And in this pilot phase, you're trying to figure out all the kinks, but are you drilling wells while doing this or no?
No. We've drilled our wells. They're in place. You're basically just optimizing flow rates, assessing, how successful different approaches, how much acid you put in, how much fresh water you put in. There's a whole process you have to go through to learn what that particular rock environment needs from an application standpoint to be most efficacious for generating copper.
Okay. So what's your 5-year plan then right now? You're gonna optimize this and you're just gonna keep growing it? How much are you looking to produce in a year? And I was reading somewhere that you had a 3-stage approach, but did that change now to a 2-stage?
No, not really. I mean, it's fully scalable. So if you want to drill 10 more wells, drill 10 more wells. You want to drill 50 more wells, drill 50 more wells. We're permitted up to 110 million pounds a year. Our goal from this initial pilot stage component is 25 million pounds per annum. And that's really what the existing SXEW plant that processes the solution into copper plating. That's really all it can do, technically. We bought that facility. That's the other reason I went after this project is there was a bankrupt mine next door because they ran out of oxide ore and they had a plant that was designed to process, you know, a copper heap leach or operation, oxide, and that they went bankrupt. They didn't ascertain that they had enough oxide resource left. So but the facility they built, which they shouldn't have, but they built it, we got for pennies on the dollar. So that facility technically is designed for 25 million pounds a year. When we refurbished it to put it into operation for us, we made some adjustments, so we can probably squeak out 30 to 35 out of the existing operation, which is great. So then we have to build a brand new SXEW, which is several times larger, and that's going to cost significant money, you know, $100 million. But at the end of the day, we'll be cash flowing at between 25 and 35 million pounds a year at a very, you know, at $354 copper. So our ability to access capital for that expansion will be cheap, as opposed to what it's been the whole way through, which is expensive, right? Because
Right.
When you're a cash flowing operation, it's easy to get traditional bank financing.
For sure. So one thing I took away with this in situ method is it depends on the geology. You say not many places in the world you can really do this method, right?
That's
So
correct.
when you guys are expanding, are you just expanding the current well field, or are you going to be, do you have to be selective of, you're going to set up another well field 300 yards that way, or how does
Sure.
that
Well,
work?
I mean, the deposit's well defined and identified, and you know, you're looking at a 25-year mine life. So there's literally hundreds and hundreds of opportunities for well field placement along the whole deposit. So the deposit's pretty uniform in terms of its dimensions, in terms of how it's been defined by extensive drilling.
Mhm.
Again, one of the things I liked about it when I approached this opportunity was that it was well defined.
Mhm. It's exciting. You got kicked in the teeth with the iron price before, but with the copper price, where do you see it in the short term? Because that will matter, right? The short term
Oh,
price.
listen, I'm very bullish on copper, and I could tell you why. I had to finance this project, and we brought in partners. We brought in Greenstone, we brought in Triple Flag, Altius Minerals, you know, significant sums of money. I'm just getting my numbers right here, but Triple Flag 75 million, Greenstone 60 million, Altius 9 million. It was hard. These companies were investing money when the market was crap and nobody wanted to talk to you about commodities. You know, it's like trudging through a trench of mud barefoot with a sack of coal in your back. It was hard. Um, but, you know, I know for a fact that there just very few projects were getting funded during that phase. And so you have this new Green Deal and the push to the electrification of everything, which requires infinitely more copper than we've been using to date. Let's just give the automobiles example, you know, 35 pounds versus 125 pounds. It's there's not enough supply. And there's a massive gap in the future supply and demand, because the demand is going to outstrip supply because nobody put any money in. Right? When commodity prices are in the tank, it's very difficult to raise money. What happens? The projects don't get developed. People don't care. Don't talk to me about that. Right? They don't want to see it, except for the committed, like the ones I mentioned, who are patient money and are prepared to make the investments when there's blood in the streets, when nobody wants to talk to you. But the flip side of that is there just aren't that many new projects coming on stream. So you're going to see monies finally start going into exploration, but it's 10 years between exploration, finding something and getting it permitted into production. And now it's going to be even harder to get things in production. Why? We have more environmentally strict standards, right? It's harder to get something permitted now than it's ever been, and it's going to continue to get harder. So that's going to make it even more difficult for new projects to come on stream. So you're going to get your Green New Deal, you're going to get your electric cars, but you're going to be paying a lot more than $3 copper for it. And what I see now at $4 copper, I see in a few years $5 and $6 copper, because there's nothing to come on stream. There's nobody out there waiting to flick a switch on a project. They're all running, and the near-term production ones are all getting funded, like Excelsior. We just raised $30 million. But then there's nothing behind that. There's maybe some advanced exploration projects, which themselves are 7 to 10 years from permitting and production. So I'm about as bullish on copper as you can be.
Yeah, it's funny because you kind of got, like you said, the stuffing knocked out of you with COVID, but it might have been a blessing in disguise because now they're coming back full force with Green New Deals and everything. So the demand for copper might be more than what you expect, right?
Well, I think our expectations is going to be significant unless there's a reversal in the course for this Green New Deal. You're looking at the end of the internal combustion automobile, and that means infinitely more demand for copper by several orders of magnitude.
Very exciting stuff. I have a question just I'd like to ask you because you're in the investment community. How do you manage losses, or how do you know when to take your losses?
You don't always know when to take your losses, but you learn the hard way. At least I have, and sometimes it's better just to take your loss and move on. And sometimes it's better to, if you're down in a stock position, to add more. Like right now in Excelsior, we did a large financing, and there was also a correction in the market that occurred just after we closed it. So you had people taking profits, and then you had the financing itself typically puts pressure on a stock, especially when you have a warrant attached to it like we did. So there's a lot of what's called warrant clipping going on. And that's something they don't teach you about in school, okay? And you want to go out and raise money. You're not completely de-risked. What do you do to incentivize people to buy? Well, you say, we're going to give you a share at this price. We're also going to give you a warrant to buy another share, in this case, up to 18 months later, at a slightly higher price than it is today. So if people think you're going to be in great shape somewhere down the line, and your stock price should be significantly higher than the warrant strike price, that's what pulls them in. But a lot of times, that's the only reason they buy in a deal like this. They actually don't want to go long on your paper today. They only want the option you're giving them in the warrant. So as soon as the deal closes, some of them, not all of them, but some of them, ditch the stock and hang on to the warrant. And that's called warrant clipping. And it's a big part of the mining business. And that's what a lot of casual investors don't understand. Why did the stock price go down? Well, there's warrant clipping going on. So it's putting pressure on the stock today, while people take the warrant that they wanted from the financing and then take the capital that they got back from the sale of the stock and redeploy it in another mining deal where they'll clip a warrant on that deal. And they just go around clipping warrants. And what they're doing is assembling a pool of options. And they know most of them won't work out, but some of them will, and that pays for everything plus a profit. So it's part of the mining business that people, they don't teach you about in school. And but it's how things get done. As we move up our production, and as the pressure from the financing warrant clipping begins to abate, because it is finite in supply. It's limited to the size of the financing and the component of the financing that has investors that are only in for the warrant clip. Some of the investors came in to have both. Some of them came in and they hold the stock and they trade the warrant because the warrants trade. So there's a finite supply. We call that an overhang. And that's what puts pressure on the stock. So it's a great time to buy. If you're a believer in copper, Excelsior is a great buy right now.
Wow, very interesting. Anything else you could share for the young listeners out there that they don't teach you in school?
Yeah.
About the resource sector?
Well, sure. I mean, take your profits when you have them, and look for opportunities to re-enter if you like the story. Don't sit there on a stock. You need to trade these stocks as an investor. I prefer you wouldn't. I prefer you buy my stock and sit there until everything's done. But I don't do that when I'm investing, and it's not what I recommend to people. You need to trade them. You need to take your profits while they're there. Look for another, if you don't want to take all your profit, take enough profit that you pay for your investment. Let the rest of it ride.
Mm-hmm.
Don't just sit there and be a believer in the story and stay in a stock for 2, 3, 4 years. That's not the way to do it. Again, as the chairman of a company or CEO of a company, I like it when people do that. I do that. I have to do that. I can't be trading my own stock. I'm all in, and I'm adding to my position as we go along. But if you're just investing and you're not part of any of these companies, then you have freedom. And you should exercise that freedom to take profit when it's available. Conversely, if you are a believer in a story and you understand why a stock is down, so in the case of Excelsior, you have that financing overhang, which is finite in supply and in time, and eventually will abate, then you take opportunities to add to your position and lower your adjusted cost base. But you have to be thinking like that all the time. It's not as simple as trading these stocks as you just buy it and sit there. You can't do it. You got to be active.
Mm-hmm. I always take profits for sure. But that's been awesome. Thank you, Mark. I think it's time for the vault now. So if you guys liked what Mark had to say, like what Excelsior is about, make sure to like and subscribe. But for the vault, it won't be available on YouTube. So let's get into it. Well said. Well said. So, Mark, I like letting my guest end off the podcast. So go ahead. Here's your time for your plug. Anything you want to talk about with Excelsior, the floor is yours.
Sure. So our underlying commodity is copper. We don't have anything else. We've got a fantastic management team. We have all sorts of big institutions that have put in considerable capital, that have done extensive due diligence, and are believers in the management team and the project. We're a little beat up right now, but the time to buy is when there's blood in the street. So when a stock is beaten up and you understand the reason why, and I've tried to explain that to people today, take advantage of that, because you make money by buying low and selling high. Don't go out and buy a stock where the chart looks like this and you're buying at the tip over here. Sure, you feel safe, but you're not. The time to buy is in the early part of that. And so it's buy low, sell high. So we're a good bet. We just brought in $30 million on a bank-led bought deal, Scotiabank and PI. There's plenty of due diligence done by all sorts of deep-pocketed institutions that invested in the deal. You can take comfort from that and know that if you come in an Excelsior today, you're going to make money. I believe you will.
Thank you, Mark. Thank you for taking the time to chat with me today.
Okay, thank you.